help us understand the underlying problem that you're trying to solve in the world.
Yeah, for sure. I mean, look, it's been well documented. I've heard it on your show as well too. I think everyone knows the story that like we're undergoing for the first time this like rapid load growth. Electricity demand is increasing. Electricity prices are also increasing, and reliability and power outages are increasing as well too. And so that's all a problem, right? Like for energy companies, their usage is going up, and the quality is going down. So they know that's a big problem, and we've got to find a way to solve it. And so, there's a lot of different ways you can think about for the customer. How do you help solve, rising electric rates and increasing power outages? But one of the best technologies that are out there that's proven and deployed is batteries, particularly customer-sided batteries at the residential level. And so the question is really, if you look at how much solar has been deployed, and then how much battery has been deployed, there's a huge lag on the batteries. So the question is why?
Yeah.
Given that they solve all of these issues, and so that's the way to think about it.
Yeah. Talk to me about, for those who are unfamiliar, introduce us to Haven Energy and why this business that you and your co-founders have built is going to help solve this problem.
Yeah, so Haven is a technology platform that helps energy companies deploy batteries and solar at the residential level at scale. And really the problem that we've seen is that, anywhere from retail providers to utilities to the CCAs in California, they all want to deploy more residential batteries. In some capacity, they put out incentives or rebates or different financing structures. But historically, for a variety of reasons, which we get into, those are underutilized and not used. And so those incentives don't get put to work and batteries don't get deployed. And so Haven is a unified platform that brings in all in one place, origination, financing, installation, and VPP management that, is a very, very simple way for any energy company to be able to deploy batteries at scale and stand up their own virtual power plant.
The story that captured my attention, and it's probably your maybe your biggest success story so far, is with CCA, and we'll need to define what that is in California. That is exemplary of how you have been able to identify an opportunity in the marketplace that allows you to sort of demonstrate market viability, product market fit, as it were. Could you introduce us to that project and why it is sort of that first domino to fall in the Haven strategy?
Yeah, for sure. So maybe I'll take a step back and just layer the groundwork, which is in California, you have the three main public utilities between PG&E, SoCal Edison, and San Diego Gas and Electric. And then in certain cities and counties, customers get to choose, do they want to stay with that utility or do they want to go with their local, what's called a community choice aggregator?
Yeah.
And that CCA, they provide the customer billing, a good customer experience, and the bill to the customer. And so the project that you're referencing, so we're doing a project with Clean Power Alliance. They're the CCA that covers the Los Angeles area. They want to deploy a bunch of batteries for all the reasons that we just mentioned, and they think it's a really good thing for their customers. And so they've come to Haven for us to be able to partner with them to figure out how do you actually deploy all of these batteries at scale.
Yeah.
And I think the way I'd say that we're doing that, our very first wedge into the market, what we're seeing in California, and this is definitely true in states like the Northeast as well too, there's a tremendous amount of incentives for income qualified customers to install batteries, but they largely go unused. And so what we say is like, hey, instead of the customer getting a system installed and then getting the rebate afterwards, what if you were to bring that forward, wrap that into a very simple product for the customer and say, let us install a battery for you. You don't have to pay us anything. We'll collect all of the incentives, tax credits, and rebates. You get all the benefits of the battery, from power outage protection to
reliability,
and helping lower your electric bill. And we'll handle everything else from there. We'll handle the management and maintenance. And so that's the pitch that we're going to customers with in California, and that's what's really resonating right now.
And who owns the asset in that situation?
So in this situation, Haven owns the asset. And so we own the assets. We manage it and optimize it on behalf of the customer, but it sits at the customer's house or it sits at the customer site.
Mhm.
So they get the benefits of some of that behind the meter benefits of the battery.
So I presume then that there's some technology you've also built in that allows it allows for an element of battery backup, so to speak. So like, how do you decide either on the customer's behalf or on Haven's behalf where those electrons are deployed? Because at some point, like the homeowner may say, no, I want actually more power backup for my house, but you owning the asset want to be able to deploy that electricity elsewhere where there's a higher return on that investment. Can you talk through that friction in the relationship?
Well, I think what you described is like the fundamental problem that's always been around with batteries. Like the reason a customer wants a battery is very different than the reason like a utility wants a customer to have a battery.
Yeah.
Right? It's like a customer wants a battery for most of the time it's for backup power protection.
Right.
And a utility wants a battery for capacity. They have all this extra solar and they just want to be able to shift electrical usage either 4 hours forward or 4 hours back.
Right.
But most of the time that the reasons the customer and the utility want those batteries is not aligned. And so what we've sought to do is try and unify that. And that's why we own the assets. And so we're able to, for the customer, always prioritize backup power.
Yeah.
So if in the event of an outage or any planned public safety power shutoff, the battery goes into like a self-defense mechanism mode. And so it charges up and the customer gets full backup protection there.
Yeah.
But when the grid is operating normal, the battery just cycles on a normal cadence. And then for the customer, it helps lower their bills. For the grid, it helps remove that stress from that 4 to 8 or 4 to 9 p.m. period.
So Vinnie, what I'm hearing you saying is there's almost never a crossover where there's a simultaneous sort of interest overlay where the utility wants the power, but the homeowner also wants it. They tend to happen in different cycles. Is that right?
Sometimes there will be an overlay, but I think the key is like a customer-focused product is that like you always prioritize the backup power, even if it comes at the expense of like trading off some demand response or grid services revenue. Because the reason a customer wants a battery is for that backup power. And it'd be a suboptimal experience to say, hey, there was a peak pricing event. And so a bunch of your power was sent back to the grid. That doesn't resonate well. So you have to, for the customer, always make sure that they're getting that primary use case of backup power.
Got it. If you think back 5-10 years, you've been in the power sector for a while now. We'll get into why in a minute. But if you think back just over the last maybe 5 or 10 years, what needed to be true? What technology, what market mechanisms needed to be in place in order for you to for your business to succeed where predecessors have failed trying to do this?
Yeah, for sure. I mean, it's like even when we started this business 3 years ago, like the industry was fundamentally different. Back then, there was no tax credit or incentives for batteries. It was only on solar, at least at the residential level. Battery prices were like significantly higher than they were today. And even then, demand response programs were around, but weren't as standardized as we're seeing today. And so, if you take aside like the power prices have been rising, that outages have kept increasing, like which has led to an increase of demand. Mm-hmm. This business wouldn't have worked 3 or 4 years ago because the way that we're able to go to market and offer a customer a system at no cost, and not just no upfront cost or no long, it's like an absolutely no cost system. You couldn't make the math work 3 or 4 years ago. Whereas today you can make the math work. And that's why, I think we're seeing a tremendous adoption of batteries under that model.
Explain to me how you got your start in the energy sector. Kind of what drove your interest there and how did that culminate in your first or second job maybe in the power sector?
Yeah, for sure. I mean, look, I grew up in New Orleans, like along the Gulf Coast of Louisiana, and growing up there's really two main industries. You have tourism and you have energy. Mm-hmm. And so I was always surrounded by energy and just knew that was naturally an industry I wanted to gravitate towards it, not exactly knowing like which flavor of it. So coming out of undergrad, I went and I did a master's in energy trading. And that was like what really, piqued my interest in like how the energy markets work. I think what is so fascinating about it is unlike, some of the financial markets, like there is a physical product and there's like a physical trading opportunity, and that presents a physical trading arbitrage opportunity as well too.
Why energy trading? How did you know that's what you wanted to do?
Well, I knew I wanted to do energy, and I
Hmm.
really liked finance. And
Okay.
growing up, I was, for whatever reason, I was always like following the stock market as like a 12-year-old and like fascinated with like the way financial markets worked. And so energy trading was like a good combination of those two.
So for those who are unfamiliar, what is energy trading at its core? How do you learn to trade? And as getting a master's in energy trading, what does that equip you to do?
So there's two facets of energy trading. There's the physical aspect of it, which is like how do you control the physical products of goods
Yeah.
and move those from like markets from like where they're produced to where they're consumed. It's probably the
Mm.
easiest way to think about it. And then the other is like the financial layer, which is effectively how do you hedge any price risk or volatility. And so when I got started, I used to work for a company called Motiva, which is a joint venture of Shell and Saudi Aramco.
Okay.
When we were looking at trading and processing all the refined products that came off of refineries. And so probably a good example of both the physical and the financial product. We were looking at when gas and diesel and jet fuel comes off the refinery,
Mm.
what's the most economical place to put that? Do you send it up to the Northeast through the pipelines? We had access to ships. You could ship it to Europe and there was a pricing arb there. So you're just running these different models to see based on what it costs and like what you'd expect to get when it lands, what's the optimal path to direct that physical product.
I love that. Okay. So if we fast forward now to what you're doing at Haven, you are fundamentally, if folks think about like the first 15 minutes of this conversation, you're thinking about both the physical goods, instead of trading molecules or trading electrons, of these electrons that are being generated and stored. And then what are the financial instruments that allow the optimization of each electron that is generated? The utility has to think, do I want to store it for later? Do I want to push it back into the grid now? And they're always trying to optimize for this on the load, on the source side, on the generation and delivery side to the consumers. And now they have to think about these loads in the market that are homeowners that are also becoming generators. The fascinating, I mean, the way the market has evolved since your first job at this JV with Shell and Saudi Aramco is that now homeowners can participate in the energy cycle in a way that they never could before. That's fascinating. Can you talk to me about the early process of getting funding around this? Because you want to go and own this basket of assets, these batteries. It's not cheap to do that. One of the fundamental reasons why homeowners haven't gone with batteries so far is the battery attachment rates are low because batteries are expensive. How did you think about the funding process for Haven in the early days, and who did you bring along as you started to get traction in that regard?
Yeah, for sure. It's worth noting that like we have evolved our model and go to market as we've
Okay.
been in the market and learned like what it takes to actually
That
scale.
makes
So
sense. Hmm.
the original model that we went to market with. So my background, after I spent some time in energy trading, I think you know this, I was at Uber for a number of years.
Oh yeah.
And then before that, or then after that, I was running a retail electric provider in
Hmm.
Texas. And so I had seen firsthand like what happens when there's grid outages and grid emergencies, having run a retailer in Texas, and the benefits, both from a physical and financial perspective of having batteries and the ability to be able to effectively use electricity when it's needed most. And so I think having seen that as running a retail electric provider, I was always interested in how do you switch to the other side of the table and how do you actually sell power back to the grid when it's most needed versus as a retail provider, you're buying power when it's most needed. And that's what can make some of the retail provider, that business model challenging. And so I got connected with my now two co-founders, two guys named Philip and Jeff. They were two of the co-founders of Casper Mattress.
Fun fact.
Very, very different. And they had built that business for over a decade, both like amazing entrepreneurs and operators. And both from a personal perspective, they were interested in the energy markets and looking at home electrification. And so the original idea for the business was effectively like, could you do some of the work that they did with Casper by removing all the friction in the process? And could you combine that with, some of my knowledge around the energy markets, and could you sell that that power back to the homeowner. So if you were to remove all the friction, could you make it incredibly simple for homeowners to get batteries?
Yeah.
And that was the original thesis of the business.
So let me see if I understand. So first of all, I'm glad you brought this in. Your co-founders are the two co-founders of Casper Mattress. So categorically, like in the last 15 years, one of the hallmark, like fastest growth consumer brands that went direct to consumer, that bypassed the traditional intermediaries and said, we're going to do this brand that's direct to consumer. Mattresses, an old, this is again, like, it's interestingly enough, we'll get back to Uber in a minute, but you've had experience working at brands that disrupt the intermediaries in the marketplace. So it sounds like the underlying thesis originally was, we're going to go take this direct-to-consumer approach and see if we can apply it to batteries.
100%. When we looked at the market, we saw that it was highly fragmented. A lot of times you have sales dealers, you have an EPC company, you have a financing company, and you have a grid services company. And we said, what if you were to verticalize that entire value chain? And if you look at like why solar is so expensive in the US and why we think batteries are so expensive, part of the reason is that there's so many different actors involved.
Yeah.
That like each of those have to have a margin to sustain their business. And that
Correct.
ends up having a lower, I think a poor quality product for the end customer or the homeowner. And so we said, if you were able to verticalize all of that, which is a lot to do, could you take slightly less margin on each of those pieces and then deliver the lowest cost solution to the customer?
And I want to get back to the original question again, because I want to kind of set the stage for how a company like yours can have found commercial success. Obviously, you had to sort of iterate around the core product until you found the MVP, but to fund that venture, you had to go out and convince investors first early, like friends and family, and then a seed round. I don't know how far you've gone, but I'd love if you could just paint a picture for us of what that roadmap financially looked like to stand the company up. And then I want to dig back into some of the layers of kind of what informed the sort of the structure of the company.
Yeah, for sure. Yeah, so when we set out, we knew we wanted to fund this with outside capital. We knew we had to stand up tech and product and teams. And so we went out and we raised our first round of venture capital. We did a seed round that was co-led by two groups that we had really good relationships with. One is an amazing venture shop out of New York called Layer Hippo.
Hippo?
Layer Hippo.
Huh.
I think they now cover a very wide variety of investments, but they were behind some of the iconic New York consumer brands. They did the seed round in Casper. They which is how Philip and Jeff knew them.
Right.
They invested in Allbirds and a few of the other, some of those first direct-to-consumer businesses. So Layer Hippo was our very first investor. And then our second was a venture fund out of London called Giant Ventures. And I was connected to Giant, the original founder of Bulb. He had left Bulb and became a venture partner at Giant. And so we, between those two, had consumer and climate. So we had really good backers who believed in us, and we were able to quickly go raise the seed round and start the business.
Are you comfortable saying how much you raised in the seed round?
We raised $4 million in the seed round.
That's amazing. And had you raised any friends and family before that?
That was the first round of capital that we raised.
That's amazing. And to date, you haven't raised beyond the seed, right?
So then we raised the seed, and then 12 months later, we raised the Series A.
You did a Series A. And is the Series A where you began to bring in strategics?
So the Series A was, again, led by Giant Ventures. And we were joined by a number of new investors, and then one of the new investors was Comcast Ventures. And so they were the first strategic investor that we brought on as well.
Comcast, the cable company.
Comcast, the
media empire.
Yes. Yeah.
That's fantastic. What does a company like Comcast see in a venture like this?
What that business is so large that if you think about internet and cable, for them, I think what they get interested in is like, what are other industries that have that same market size and potential? And
that touch the same homeowner.
And that touch the same homeowner, right? And so, and energy is one of those.
Of course.
Where every homeowner uses it, and every homeowner could probably use a better experience of it. So we got to know the team over there quite well, and we were excited to welcome them in the last round.